What's going on with Celsius? Is a margin call around the corner? Why has the price of the CEL token shot up? Watch this video to find out here on Mundo Crypto. Celsius launched in 2018 as a banking and financial services platform for cryptocurrency users. Its goal? To beat traditional banking at its own game by offering services with conditions that traditional financial institutions cannot offer. Its position is quite clear on paper, but why has the community questioned its long-term sustainability? Because its conditions are too good. Very high rate returns on savings and deposits, much easier and fairer loan requirements than traditional banking, and algorithmically calculated automated rewards per user. In addition, it has a wallet on CelPay with its own token, CEL. The value has skyrocketed by more than 300% in the last week. Before jumping into the fundamental reasons behind the Celsius token's significant hike, let's carry out a technical analysis. In the weekly chart, we can see that the CEL token has very little data, as it was only listed on centralized exchanges in January 2021. Since its launch, its price lateralized in a parallel channel over the first 6 months. From that moment on, it started forming a downtrend with low lows and highs. This was confirmed in the week starting October 25th, where it closed below an incredibly important support at roughly $4.69. In January 2022, we can see a bearish engulfing candlestick which continued the trend line seen at the beginning of summer 2021. Over this month, we can observe a rising star pattern, followed by a hammer candlestick and a full-bodied bullish candlestick looking to recover the support situated between $3 and $2.55 approximately. The week starting April 11th, it once again lost the support as it followed the market's movements, after which we can see a bearish continuation movement going on to test the new support between roughly $1.68 and $2. The bearish movement continued until the end of May, where it managed to sustain 2 weeks of lateralization, but in June the token formed a new bearish engulfing candlestick. This was caused by Celsius' decision to freeze transactions on its platform, which generated rumors about liquidity problems and a possible margin call. We'll be discussing all of this as well as other relevant fundamental developments later on. The week starting June 13th, we saw how CEL's candlestick opened on the downside, reaching the $0.18 zone. Once it touched that zone, the movement was rejected and its price experienced a boost due to a high buy-sell volume where buyers prevailed. It rose until reaching $1.65, filling up that liquidity gap. It also rejected this movement with a bearish movement due to the short liquidity orders. The candlesticks have the same connotations as a doji candlestick, displaying significant volatility. In the current week, we can see a bullish continuation movement creating a spike in the superior part. In this chart, we can see how the CEL token has experienced a drop of 98% since its all-time high. But the price bounced back over the last couple of weeks, and we can see how its value has increased by 858%. Let's look into this in the following chart. In the daily time frame, we can see how, following May's drop, the price lateralized from May 12th to June 10th, creating a range with hints of a descending triangle pattern. From June 4th, within that range, we can start seeing consecutive bearish candlesticks, and on June 10th, the range broke on the downside, which coincided with the period in which bad news led the price to its low at $0.18. In the technical analysis, we can see how from May 14th to June 13th, an important divergence formed in the RSI. For this reason, we must be aware of technical factors influenced by the market's volatility and its drastic fall. This combination of factors, added to the over-collateralization of its loan on MakerDAO and the payment of part of the debt in DAI, provided an opportunity for speculative trading. We were able to verify this on June 14th when we saw an important movement with a bullish engulfing candlestick that created a large spike. This spike is due to the fact that, as we mentioned before, there was a large liquidity gap in that area and short orders were carried out. As we can see in the daily chart, the price created a type of downtrend. This is made evident on June 14th, where the hike slowed down and the candlestick closed right below the resistance zone between $0.73 and $0.85. This created a range between June 15th and 19th, forming a bullish pennant. This type of structure is a sign of a possible push to the upside. Following this, positive fundamentals, which we'll be covering later on, caused a continuation movement to the upside, which crossed the resistance between $0.85 and $0.73 on June 20th. The following day, a doji candlestick formed, which, after testing the new resistance between $1.98 and $1.68, experienced a significant rejection as a result of selling interest generated. This could be a sign of a reversal or a pullback to the new support. If we display moving averages, we can see that in the daily time frame, the 20-period moving average was crossed and served as a resistance until June 19th, where the candlesticks closed nearly above. The following day, a continuation movement led its price above the 50-period moving average. As we can see by looking at the average's directionality, the current support between $0.73 and $0.85 will be a very relevant zone. The price must be maintained above the support in order to avoid a continuation movement to the downside. On the flip side, if the price manages to remain in the current zone, it will once again go on to test the resistance between $1.68 and $1.98 approximately, which converges with the 100-period moving average. The name Celsius Network has made headlines regularly over the last few days. Let's take a look at the fundamentals that have caused its price to shoot up. On June 13th, the crypto ecosystem went into panic mode. Celsius Network announced through a statement the pause on all user withdrawals, exchanges and transfers. The reasons: the market's extreme conditions. Withdrawal orders piled up on the platform and Celsius suspended activity in order to meet its financial obligations. Panic within the community grew and investors were concerned about one thing: the loan that Celsius Network took up from MakerDAO. The liquidation ratio, located at 145%, was close to being reached during the month of June. Why? Due to the market's movements, the security deposit reached 154%. To correct the situation, as of June 12th, Celsius began further collateralizing the loan by transferring wrapped Bitcoin to the protocol. This way, it managed to avoid liquidation thanks to the increase in its security deposit. To secure its position, the company paid off part of the loan by making several direct payments. With these movements, it managed to reduce its settlement price to $13,605 per Bitcoin unit, leaving its ratio at 214.08%. This is how it avoided a possible margin call. If you'd like to know why this is one of the most used terms in the crypto field right now, keep an eye out for our YouTube channel tomorrow. The quick action to collateralize and settle part of the loan was one of the fundamental factors behind the increase in the value of the CEL token, but not the only one. After suspending withdrawals and transfers on the platform, Celsius Network sought advice from the law firm Strauss to look into various solutions to the financial and legal problems that they might have. After this, Simon Dixon, founder of the investment firm Web3 Bank to the Future and one of the first investors of the Celsius Network, announced a recovery plan for the platform, which spoke of a solution that uses financial innovation. This made the situation seem under control, but what about the suspension of withdrawals on the platform? On June 20th, Celsius spoke up once again regarding this halt. In its blog post, it addressed the community, highlighting that its goal is to still stabilize its liquidity and operations. However, this process would take time. In addition, it pointed out that its work goes hand in hand with regulators and officials in search of finding a solution. Time will tell whether the community continues to trust the project or whether they decide to cast it aside, carrying out mass withdrawals once the option is available. CEL is a token with the usual ERC20 standard, but it differs from Ethereum through its modified proof-of-stake algorithm for assets. Due to this, on the Etherscan Block Explorer, we can see how the CEL token holders between June 11th and 21st increased from 30,081 to 32,802. If we delve into the chain analysis, we can see that the average number of new users per day reached its all-time high on June 21st with 428 new users. Here we can observe the activity of daily active users, which also marked an all-time high on June 21st, with the aforementioned 428 new users and 475 who were considered old users. As for the number of daily purchases on DEX, it has also increased notably after having lateralized since August 2021. On June 21st, we saw how the price per trade increased substantially to $2,112 per single wallet. As for unique portfolios, a significant increase was also seen. The market's volatility has generated a delicate situation surrounding Celsius Network. The suspension of all withdrawals and transfers on its platform, alongside the risk of a margin call due to the loan on MakerDAO, contrast with its adequate speed to search for a recovery plan. This has caused a hike in CEL's token price as well as concerns within the community. What about you? Do you still trust Celsius Network?